I think you need to record it. Or is it recording?
Recording. Hi, Eddie
All right.
Fooshang with the
What's up,
Fooshang
Lisa?
team. How are
You
you?
good? Good. How are you? It's good to
I'm
see
doing
you.
better knowing that you are there to help my little new first-time home buyers, that this is a moving market. Is that
It is.
a good thing to say?
It's a crazy market right now. It really is. Absolutely.
And I want all the people that know me know that I'm not I don't do a lot of residential. I know how to do it. I've been doing it for over 25 years, a lot of time, but
Hmm.
I just don't prefer it. And so I obviously pick partners that are really good. And you have been through a very trying time in your long history. Give us a little snapshot of your background and then tell us, you know, we've had some deals in play that have been changing and you've got a bunch of those, so mine's not special. Tell us about your background and just I'm going to be quiet while you tell us what is happening. How are you handling it and what can we look forward to that's different from what we've had for the last few years?
So I've been down this path before. Everybody probably remembers the 0708 crash. I got into business back in 2003, and I have gone through the financial crash of 0708. I know exactly what happened, and I see the writing on the wall of what's happening right now, right? This situation is a little different in the sense of the global impact that it's causing, right? 0708 really affected the financial markets. Yes, there was some global impact from it, but it was not as impactful as this one right here. So here's what we're dealing with right now, just to give everybody kind of like a perspective of what's happening. What this coronavirus is causing right now is a mass uncertainty and fear in the marketplace. That mass uncertainty and fear is really derived by the orders of people staying at home. Businesses are obviously unable to continue to survive, some of the businesses, and it was causing a lot of people to obviously be laid off in lieu of the companies completely shutting down. So they had to obviously cut down on some of their expenses, and payroll is the most expensive part of any business expense. So ultimately what usually happens when situations like this happens, businesses cut down on their payroll. So they end up obviously laying off some people, maybe furloughing some people. The end result is the same. When people are not having income, they obviously go and file for unemployment. The unemployment gauge is really the measuring tape that tells us how is the economy going, right? When the unemployment rate is super low, which it used to be as in maybe 3 weeks ago, 4 weeks ago, we were at the lowest ever. That was an indication that the economy was very strong, very, very well, meaning there was pretty much everybody in the country is employed or at least has the ability to be employed somewhere. Fast forward to where we are right now. We went from 2 weeks ago, I believe the number was 3 million people who filed for unemployment. The week after was 6 million, doubled. The week after that, we were at 16 or 18 million. And we're expected for this, by the end of this week, based on the stuff that I'm reading, that we probably will hit somewhere around the 25 million mark of unemployed people, just like that, in a matter of 3 weeks period, right? What does that mean? What it means for the lending side of it, for the mortgage companies and the servicers and the people who are collecting the mortgage payments from clients, well, that's a very red flag. And it usually indicates when people are unable to make the mortgage payments, what will most likely happen is foreclosures will come next. And foreclosures, people have a misconception of the term. They think that banks thrive on foreclosures. They look forward to foreclosures. It's further from the truth, because when banks have to go through foreclosure, there's expenses and fees and they have to go through auctions and on all that stuff. And what they want to do is just want to get rid of the house. And a lot of times they're not making money on it. They just want to get rid of it. Obviously, it's a great opportunity for those who are trying to buy investment properties and such. It's a fantastic market for them. But I'm just talking about in the general idea of what's happening. Lenders are obviously scared that they are going to have thousands of their loans to be basically in limbo, because a lot of those people who are not employed anymore or are facing the potential loss of employment, that is going to be felt in the next 90 days. So what's going on right here is lenders are terrified at coming down the pike. So what they're doing is they're basically tightening their grip and making it very hard for new loans to be obviously qualified or originated or generated. And the reason why is there's a liquidity shortage. They don't have a lot of liquidity right now, given the fact that because of the forbearance agreement that is completely misunderstood, and the media has went out there and told everybody, hey, the federal government passed this.
That's the CARES, right?
Bill. I'm sorry?
Is that the CARES?
That's right. Yeah. So what's going on right here is people are getting misinformation, and they're under the impression that they no longer have to make their mortgage payment because the government is bailing them out, which is farther from the truth.
Yeah.
It's not any way, shape, or form true. So what happens is these people are now calling their lenders and telling them whether they need it or not. This is the problem. This is designed for people who truly need that assistance. But everybody now is calling their mortgage companies and they're trying to basically request a forbearance agreement for 6 months, and sometimes it can go up to 12 months, but they don't understand how it works. So if you are unable to make your mortgage payment right now because you got laid off or your income decreased or whatever the case may be, all you're doing is just telling the mortgage company, I am no longer able to make my mortgage payment. So the mortgage company is basically telling you, okay, we're going to work with you. We're going to go ahead and pause your mortgage payments for the next 6 months. But at the end of the 6 months, you owe us for the 6 months plus month number 7, which is due now by the time you're ready to make the payment. And 90% of the people are not going to be able to come up with that money. They don't have the savings. They don't have.
You're saying that at the end of the 6 months that the federally backed ones want all that money back at that time, plus the 7th month payment.
That's right. Yeah. The mortgage company you still owe the mortgage companies those payments, right? So let's say your mortgage payment is $2,000 a month, right? 6 months from now, that's $12,000 plus the $2,000 for month number 7. That's $14,000. If you don't have the money to pay it right then, right there, then they may obviously work with you, do something called like a loan modification, where they will basically recast your mortgage. And not every lender is going to offer that. It's up to the lender. So it's going to differ from one lender to the next. So you just have to be very careful. The first thing you want to do is you want to call your lender and speak with them and find out what are your options. Don't just assume that it's a blanket solution for everybody, because it's not. Every lender has the right to make their own arrangements, right? So best scenario, they do a loan modification for you and recast the mortgage. Recasting meaning they take the balance plus whatever you owe and just recast it over the remaining years you still have left over, right?
That's where you're seeing 30 and 40 year now. They're talking about that in the.
There's no, I have not heard anything about 40 years. I mean, in 30 years, it's not going to happen unless you're doing a refinance, and you can't refinance because now you're 6 months behind on your mortgage, right? So it's a catch-22.
Yeah, that's what I was just going to say.
So if you had a 30-year loan and you already paid 7 years on it and you have 23 years left, they're gonna recast the loan over the next 23 years. And again, it depends on the lender. Some lenders are going to calculate it differently, but in general, that's what a recasting is. So if you are struggling with a $2,000 a month payment, now your payment jump up to $2,600 a month. And either way you look at it, you're going to be putting yourself in a financial hardship if you're not careful, if you don't know what you're doing. Forbearance does not mean forgiveness. I actually like to say forbearance means foreclosure if you're not careful, because if you don't pay the lump sum payment or are able to maybe do the modification with them, then you're going to be putting yourself in a hardship. Does that make sense?
Yeah, and I'm just reading some notes. I'm listening to you because I just wanted to have some intelligent questions to ask you. and really you're answering everything, so I don't have much to ask, but that forbearance is brought up in this. This is a document by the National Association of Mortgage. They're just, giving borrowers advice, like getting in touch with their servicers and trying to come up with that agreement that you're talking about.
Exactly.
And that word, the 40-year here, it says a modification change underlying the terms of the loan, like say extending it 30 to 40 years. And this is from a guy from the association in Minneapolis. I thought that meant that you would pay the same amount a month. It would just extend out. But now, what you're saying is they're going to forbearance you. But when that debt is owed again, they're going to put it on the front end where you're paying a partial of that at the front. It's not like your payment stays the same and you just extend
Correct.
it, because that would be a refi, right? Is that what you just said?
But refi will not be approved because now you're showing that you're
behind
mortgage, right? So nobody will approve that loan, right?
Well,
and to answer your question, every lender is different. That's why it's very important for everybody. Call your mortgage company, speak with them, explain the situation, find out what your options are, and just make a calculated decision, right? Don't just go in there blindly and assume everything is going to be okay.
no.
Obviously, we hope that everything is going to be okay, but don't just go assuming that everything will be fine, because if you're not paying attention to what you're doing and what you're agreeing to, you could potentially put yourself in a very serious financial hardship.
So that gives me, this question is, and it talks about in there, and everybody should know this, but we're gonna pretend nobody, for people that don't know. When you contact your mortgage lender or your service company, whichever one, bank, whoever you got your loan from, you need to record and document everything that's being said and written down in writing, like you said, so you don't misunderstand something and end up in a worse
Correct.
situation.
And if you don't understand, ask them to repeat it.
Yeah.
Make sure you understand everything, and make sure whatever agreement you guys come up with, it has to be in writing. They have to provide you something in writing explaining what changes or what
you're going to pay it, how much you're going to pay.
And most lenders do. Most lenders, they offer it in their actual forbearance agreement because they require you to sign to agree to that plan. And it specifically outlines the terms of the repayment.
So this is funny because I know you don't mind this, but if everybody starts calling you, asking you questions, the mortgage lenders, how are you able to work on the deals that you have? I mean, and I know you personally are super conscientious, and your relationships are what are super important to you and how you built your business. How are you managing that if you're getting called by all your loyal clients and little pain in the butts like me, who I'm just trying to send people to a safe lender who knows how to navigate a bad time, like, because you do. How are you getting business done, Eddie? I mean, I know.
Well, I am blessed to have a really awesome team. I have a fantastic team with me. I have Christina, Brian, and Anna. And we work very close together to find out what is the obviously priority, who needs the most of attention. So any existing files that are obviously working already, Christina is all over that. She's a machine. She's absolutely
right.
Yes, right. Yeah. So she takes care of that. We're still closing everything on time, despite all these changes and all the craziness that we're running into. Brian and Anna helped me on the front end with, some of the newer files that are coming in to maybe qualify them, look at the income docs, take the applications and such. And if you think about it, I'm more of like the director, directing the movie, making sure that the lighting is good right here, making sure that everybody's wearing the right customs and stuff like that. But to the most part, what I really want to devote my time to right now is more for education. I want to make sure people are educated, whether real estate partner like yourself, maybe another loan officer who's newer in the business and doesn't have any guidance. There's a lot of them out there who are desperately need someone to kind of give them the guidance, give them the light at the end of the tunnel, right? Obviously, reaching out to past clients, explaining the situation to them, making sure they understand what's at stake. So that's really what my drive right now is, to make sure that everybody is educated, everybody understand what's coming down the pike. And here's the other thing that I was going to share with you and everybody else who's listening and watching us, we are coming out of the most aggressive sellers market that we have experienced probably in the past 20 years, right?
Historically, I mean, I know. And Austin's
Right.
been longer than the country, than the
It
nation.
has been. It has been. And frankly, Texas as a general, does not really get as bad of an impact as everybody else around the country, just because of our thriving economy and everybody moving here and all this stuff. But nevertheless, we are being affected negatively by what's going on right now, right? But what is going on here is the past 7 years, we've had a very solid ride in the seller's market. And this shift, or the curve, is now shifting to now the beginning of a buyer's market. And to those who are listening to us, and you don't know the difference between a buyer's market and a seller's market. A seller's market is when for every one house that is available for sale, you have 4 to 5 buyers are competing with each other for that one house, because there's not enough houses for sale. It's a supply and demand situation, right?
Mhm.
A lot of demand, but you don't have enough supply, right? And in our lingo terms, we use the inventory shortage. So houses that are available for sale, we call them inventory. So when there's an inventory surplus, that means there's a lot of houses for sale and not enough buyers, right? That's a buyer's market. When you have an inventory shortage, that means you have a lot of buyers, but not enough homes for sale to cover those buyers, right? So what typically happens, and you've witnessed it, and everybody in the real estate witnessed it in the past probably 24 months especially, you had multiple offer situations all the time. As soon as the house gets listed on the market, from day one, you already have offers coming in. And times, and if not a lot of times, multiple offers for that specific home. So what was happening, let's say, for example, the house was listed for sale for $200,000. You had 5 or 6 buyers are competing with one another for that one house. So they outbid each other, and it was like a tennis match for a while until the house was finally sold for $220,000. So that was causing the real estate market to continue to rise, the prices to continue to go up, right? Well, what we are experiencing right now is going to be a shift in this. Why is that? Because now you have a lot of people who are going to be losing their jobs, those who already lost their jobs, or those who their income shrunk because now they're working less hours or whatever, right? So that is going to cause them, from fear and the fear of uncertainty specifically, they're going to be worried. Am I going to be able to make the mortgage payment for the next 6 months, 12 months, a year, right? Or should I just go ahead and sell it right now while the market's still considerably in a seller's market, right? Before I lose out, and try to capture as much of the equity as possible, and maybe down the line go buy another house when the market corrects itself. When that happens, you're going to have multiple people listing their homes for sale, right? Accompanied with the restriction that the mortgage companies are creating right now to slow down the new origination, the new loans, because they're worried about what's going to happen 90 days from now with the foreclosures and all this stuff, right? So there's a capital challenge. They don't have enough liquidity. So what they're going to do is they're going to combat the situation by slowing down new loan originations. How do they do that? Well, they will change their guidelines. They will make it tougher for people to qualify for a home loan, raise the minimum credit score, raise the minimum down payment, stuff like that. So what this is going to cause is fewer qualified buyers to enter the market. But then you're going to have a mass of homes for sale that is going to be put in the market. So what's going to happen is the pyramid will flip upside down, right? So instead of you having one house for sale and 4 or 5 buyers competing for that one house, the opposite will happen. You'll have one qualified buyer and 5 or 6 sellers are competing with one another to sell their home to that one qualified buyer, right? So using the same exact example, they list a house for sale for $200,000, and then the neighbor lists their house for $195,000, and then the other neighbor lists the house for $190,000, and then the other neighbor sells for $185,000, lists for $185,000, and now they're competing with one another until, let's say, the house sells for $185,000. And that's when you will start seeing the trend dip a little bit. Now, it's not going to dip for a long time. It's usually temporarily, but nonetheless is going to dip. It's obviously pros and cons in every market. For every market, there's pros and cons, right? The cons right now is going to be for the seller, which they took a massive advantage of what was going on in the past 7 years, but now is coming to become the advantage to the buyers. So those who are holding out until the market corrects itself to find the best deal or to buy the house for the best pricing, this is it right now. You need to get yourself ready. You need to get your loans in order, because in the next month or two is going to be absolutely the perfect time and perfect opportunity for buyers who are looking to buy houses for themselves, or maybe investors who are looking at other properties. And here's the other thing. When the market takes a hit that way, the rental market becomes lava hot.
Oh, okay.
Those who are looking to buy investment properties for rental, this is going to be the perfect timing, because the rental market always thrives when the real estate market's contracts, right? When it restricts itself, when it slows down, when it dips down, this is a great time for those who are landlords who own homes for rent, right? Because unfortunately, people are not able to maybe qualify to buy a home, or something happened with them on credit-wise that dragged their credit down, that they're now not able to qualify for a home loan. They're going to still need a home to live in. And that's when the rental market really thrives. Does that make sense?
No, it does make a lot of sense. And I'm sitting here thinking about, you're kind of talking, because I saw this too. You have two types of buyers that are going to come out of this. You're going to have your strong, qualified buyers that are, maybe going to get a good deal on a nice forever homestead, right? On a home.
Exactly.
And then you're going to have your investor buyers. And I've heard, because that's the world that I come from, is the investment buyer. And most of my clients are investors. And I've heard negative about, oh, they're buying, people are down. And I don't particularly see it like that. I see it as, you need those investor buyers to buy that inventory so it doesn't go back,
That's
like,
right.
And also, they're going to be able to, just like right now, help renters at a time when they're in need, instead of houses just sitting on the market. Because I remember in 2008 and 9, houses were sitting on the market empty, literally empty for years, 2 years. I remember a lady had a Wells Fargo house that she just said, sorry, I can't pay, and walked away. And it's nicer to have somebody in it for lots of different reasons, just upkeep and maintenance and, crime or whatever. But I just think it's a good time. If someone can invest and buy those houses, let's buy them. I mean, that's the way the economy works.
Absolutely. Absolutely.
And I also I've had some of my younger buyers are super disappointed about, the USDA guidelines changed, and, the down payment assistance. And I said, it doesn't mean it's gone. It means not now.
Mm-hmm.
So what I've been working with your guy, Brian, on is I'm still sending my buyers over, even though they might not qualify now. And I'm telling you, this is a good time to get your finances in order.
Exactly.
And you need an experienced loan officer that it's almost like, to me, it's almost like you're a day trader. It's like you're a day trader.
In a way.
But you know the trends, and you know how to read the market enough to guide these. And in my case, again, we're talking about younger buyers, or just people that were able to qualify back at 640 days or 620. And just look at your credit snapshot now and work with a good lender like you that can get you in that position, and they can help you, be ready when things change, or get you ready now at where it is now, whatever, the criteria is now. It can help you, because now you're not allowed to be in a rush anymore.
That's right.
So I have those buyers that are like, oh, we're ready to buy now. And I'm like,
yeah,
you don't even have that choice.
Time is on your side now, if you're a buyer.
Exactly.
Time is on your side. Now, time is definitely not on the side of the seller right now, for sure. But 4 weeks ago, it was the complete opposite. Buyers did not have any time to waste, because if you don't act right, somebody else will.
So the other observation that this makes me think about is, unlike the housing, the recession we were in that was specifically because of the housing market.
Mhm.
That's not what this is. We didn't know when that was going to be over, when they were going to
Right.
absorb all that inventory. There was all that shadow inventory, right?
Right.
We have more of an idea that this is going to come out. We can see in the next,
Correct.
by summer, if it kills a lot of the germs.
Probably mid-May, we should be back to normal. I'm predicting probably mid of May, everybody will be back to normal. Beginning of June,
A new normal.
we'll be back to normal as usual. Now, that 2 months period is going to be a great window of opportunity for those who are looking to buy, because there's definitely going to be a lot of possibilities out there, right? Nonetheless, people who lost their jobs are still affected by it, and there's 25 million of those, right? And obviously Texas has some of those people. So there's still going to be opportunities for the next 2 months, but it's not going to be, I don't think it will last as long as 07, 08.
Right.
Unless, obviously, God forbid, this situation drags itself a little further, and now we're having more unemployment, and it drags a little further into midsummers and midsummer months, and I don't see it. I personally don't see it, and I hope it never gets to that point. But by probably the beginning of June, we should be back to normal.
So the goal then is that this thing runs its course. We get back to normal. Economy starts back up, and things go back to normal.
Right.
This is before we didn't know.
Correct.
If this goes on too long, and you do have a lot of things going into foreclosure, that could potentially be an issue, right? For the mortgage.
It's good, yeah, because if banks are literally losing their behinds on these types of foreclosures, they're going to probably, like what Chase did yesterday. I don't know if you saw the news. Chase raised the minimum credit score to 700 on all loans, and require a minimum down payment for 20% down on all loans. Right?
That's like a commercial loan right there. 20%.
So this Chase is, if not the largest, it's probably the second largest bank in the United States, right? So when you have the largest or the second largest bank in the country going through that reaction, that is alarming by itself, right? And they are one of the largest servicers of mortgages in the country, right? So if they are reacting this way, it usually indicates that they know something that the rest of us don't know. Just think about it this way. Banks, when they act based on facts, they act on numbers, they act based on statistics. They know something that we don't know. And obviously they have witnessed the market ups and downs throughout the past 100 years. So they know how to translate events into real time, right?
Wow.
So if they are taking that step, maybe they are just being extra cautious because of what happened in 07 and 08. They don't want to repeat it. Or maybe they know that unemployment numbers could probably get to a situation where we have 100 million people in the country who are unemployed, which would be a disaster, because now we're talking about Great Depression numbers.
Yeah.
Right. And I heard this one time from somebody, I can't remember who to give him credit, but it was really easy to understand. A recession is when you lost your job and your neighbor still has his, or your neighbor lost his job and you still have yours, right? A depression is when the whole neighborhood lost their job.
Yeah.
So if that becomes a situation, well, as you can imagine, the housing market is the backbone of the U.S. economy, right? Because everything is really evolving around housing. Property taxes would not exist without homes. Schools would not exist without property taxes. Police departments would not exist without property taxes. The streets, like all these things, that the restaurants and the grocery stores would not open if there was no housing, right? So everything is connected to the housing market. If the housing market crashes, it obviously will affect everything else around it. And if a bunch of industries lose jobs, it's going to affect the other industries that are supporting that main industry. And therefore, it's going to become a domino effect, right? Now, I'm not saying this to scare everybody. No, no, I'm just talking about in general, what's the worst that could come out of this, right? I don't foresee this happening. I don't foresee this happening because obviously everybody's getting involved, and the federal government is absolutely doing everything it can to not allow this to get out of control.
Right.
And I personally think that by mid-May, we should be back to normal, or at least the beginning of getting back to normal. I'd probably say we should be back to normal completely. Businesses would open up again, restaurants would open up again, and but I mean, there's definitely going to be an impact from it.
Well, tell me about, so when things start getting back to normal, and at the beginning of normal, which you're saying, like, let's just say May, June, beginning of June, you're getting back to normal. And now you got people coming in saying, okay, I want to qualify for a loan. And let's just say their credit scores are great, but they've had unemployment or they were unemployed for this short. How is that new qualifying? How is that going to get explained? So let's just say, how is that going to get explained? Because to me, at least on loans I've done even for ourselves, we were able to say, oh, there was a gap here because of whatever. So what is that going to look like?
So this is going to be obviously very hard for me to predict because guidelines change, as we can say multiple times. Like for right now, we're self-employed people, and this is brand new change. This just came out last week.
Let me write this down.
All self-employed people right now are required to provide a year-to-date profit and loss. They have to get a letter from the CPA confirming that the business is still valid and open and surviving. We have to get updated, most recent transaction summary from the business bank account to make sure that there is financially the business still sound.
Oh.
You know what I mean? We have to collect receipts to make sure that there's still sales. They have to write.
That's called stated income, and then all of the stated income is your tax return, right? And then all this other stuff is new. What you're saying?
No. Delete stated income from your vocabulary. Does not exist anymore. That was something back in the 06, 07 that is no longer available. So delete that from your term. Now we're talking about a traditional self-employed individual who's using the tax returns and everything. On top of everything we go through to qualify them now, we have to basically get a letter from the CPA confirming that the business is still open and it's still valid and still going on. We have to get receipts of sale to prove that they're still receiving sales and they're still receiving business. And the self-employed individual will have to sign basically an affidavit attesting that the business is still open and it's still surviving and it's still working. Because, so to say to your point, guidelines are changing pretty much by the day. So for us to tell you what's going to happen with the gap of employment, I predict that it's going to be, because obviously it's something that everybody went through it. There will be understanding going on with it. Just maybe a letter of explanation.
Just a little bit. You repeat that last little thing you just said. With everything going on, there's probably going to be something, and you
with everything that's going on, changes are rapid, and the situation is very fluid, and changes can happen multiple times a day, right? So nobody can predict what the guidelines are going to be in the future. Nobody knows. All I can say, that situation like this, when people were unemployed for a period of time, and it was during the Corona pandemic, obviously everybody will understand why the gap was.
Okay. And this is a great story for people that are out there, but I'm a 1099 independent contractor, self-employed. And the Texas Real Estate Association is letting us know that we can file for unemployment as a contractor, which is bizarre, right? And they're directing us to the Texas Workforce website. And there's nothing on there. Like, I don't fit any of the criteria to receive it. But they're telling us to go ahead, and that they have some sort of thing in the background that'll tell us, yes, we know they don't, we're going to get a deny letter right away, but they have some whatever in the background saying, well, we're going to cover this. And that's why I was asking about when we start coming out of this, and you're going to see people that had, like my daughter, for example, she has been working, making $16 an hour. Great. Now she's just off for this short period, and she'll probably go back and she wants to buy a house. So is that unemployment period going to hurt them? And I know you don't know that, but I'm just thinking.
No, if we have a solid 2-year work history and we just
Yeah, that's
the
right.
gap of employment was due to the coronavirus situation, and now that she's back on the job and back full-time hours, 40 hours a week, no, that's not going to be a problem. That's not going to be a problem.
It's not a dumb question. It's just that I don't know. And you're going to answer this. So if you're unemployed right now because of coronavirus, if you work some part-time thing just to make ends meet, how does that affect you?
We cannot use that for income.
Okay.
Yeah, because it's not consistent, it's not permanent, and we have to show proof that you've been receiving that income for the last 2 years.
Okay. So that's just that's even nothing to even consider. Okay.
So as unemployment income, you cannot use unemployment income to qualify for a loan because it's not.
Oh, okay. That either. Okay. Yeah. I wasn't really thinking that one as much, but I get it. Okay.
Yeah.
There was one other thing that I read in this article, and he just mentioned that something about, let me find it. That there was something that the states, something by the states doing their own thing with the loans.
I could not hear you, Lisa. I'm sorry. What was that?
Whether you're eligible for relief under the Federal CARES Act or your state's plan will depend on who owns your loan. What does that mean?
So it depends on the servicer, it depends on the mortgage company. So they just have to, like I said, everybody has to call the mortgage company and speak with them, and they will be able to give them the guidance.
Okay. So I don't know why it said state's plan. That kind of caught me off guard because it doesn't make sense, but it's just saying that whoever, it goes back down to the service.
Some states offer additional assistance and some states don't. So
like those grant loans and stuff?
Yeah, so it depends on where you are, where you're located. And again, it's all going to depend on the investor or the lender directly. So it's not a blanket statement. Everybody's going to have a different way they do it.
Okay, so I know you don't have a crystal ball, or if you do, it doesn't work. But
we would not be having this conversation if I did.
You'd be sorry. But True. When you saw, because I know how big you were, in the last recession, the mortgage recession, and when you how long did it take you? Did you feel like you started seeing, especially these first-time home buyers? This is what happens when you're at home, guys. It's just like
yeah.
I heard you.
Hey, everybody. Yeah.
So how long till you started seeing, and I would assume, and that's why I'm asking, I think like they don't just go in and immediately go from a 700 using your Chase Bank or whatever to 620, like they start ebbing that down a little bit, right? Mm-hmm. And what timelines do you remember or you feel like you saw that they started coming back with, the USDA being supported again and the tax credit, the first home, like those kinds of things that they put out to stimulate purchasing of people that aren't 700 credit scores or 680 or whatever. What do you think about that?
In 07 and 08, it was primarily caused because of bad mortgages.
Right.
So the financial sector was impacted heavily with that. This time around, it's not a financial situation that caused what we're dealing with. It's a health issue, right? So I don't really foresee it taking as long as it took.
Okay.
07 and 08, because back in 07 and 08, it really took probably about 3 to 4 years until it get back to somewhat. I don't really foresee it taking it that long this time around, maybe a couple of months.
Well, when you were saying earlier about, things will get back to normal, and I was saying a new normal, meaning, okay, loans will open up, but they may not be as incredible as they were.
It will probably take a little longer. It's probably not going to happen right away, just because, remember, there are still people who lost their jobs. There's still 25 million people we're estimating by the end of this week who have lost their jobs. And some of those people are going to be in a forbearance agreement that they may not be able to come out of it, right? Like we just discussed. So unfortunately, there are going to be foreclosures affected by this situation that we're in right now. So depending on the lender, remember, again, this is going to be lender to lender situation, because it's not going to be a blanket situation. If a lender who is financially stable and strong and was able to overcome this challenge and it did not really have a massive impact negatively on their financials, they're probably going to be coming back to normal a lot sooner than someone who's almost on the brink of for bankruptcy. Right?
Super leveraged or something.
Right. So it's just going to depend on the liquidity and the assets and what's available as far as cash flow goes. Right. So to answer your question, is really going to depend on the lender this time. It's not a global thing. It's not a national thing from a financial point of view, but it's going to be a lender specific situation.
So I met you and you were with a different lender, and now you're with Vantage. Tell us about that lender. And I know you picked it for a specific reason. I'm not going to infer what I'm thinking, but you tell us about that, because you know, we are actively doing some deals, and I'm very surprised at I mean, there is some flex there, like you said, depending on the lender. And I don't think people really understand, not every lender is the same.
Correct. The lender I was with originally was a fantastic lender. I obviously had a great relationship with them, nothing at all negative that caused me to make the change. The reason why I made the change specifically was the fact that I had a lot of requests to be able to serve other states besides Texas. So
that's right.
That was really the driving force. Obviously, great customer service. They're local here in Austin, so it just makes it very easier, much easier for the communication aspect of it and such. But nonetheless, the reason why the change happened, it was more for me to be able to offer a few extra products that I was not able to offer previously. I am now in 49 states. I can do business in all 49 states except New York is not ready for us yet.
That's George.
What's up, George? But you know, that was really the reason, and I have a great relationship with the executive team of this company. So that was, you know, reason. But it was, you know, the previous company was absolutely fantastic, and they're strong, and
yeah. But that's a big deal. I mean,
nothing about that.
When you have a lot of clients, you know, like me, I have a home in Oklahoma. I don't know if you knew that. I need a loan, Eddie.
All right, let's do it. Let's do it.
Yeah. So, but expand a little bit more on the differences between lenders besides, you know, having license in other states and locations. Expand a little bit more on that, because that's important.
Yeah. So in the mortgage world, there is obviously there's a lot of different entities on how a mortgage company is set up, right? You have the banks who are FDIC insured, and they maybe have, like, for example, the situation I'm in right now, Home Vantage is owned by Austin Regional Bank, right? Okay. FDIC insured. So that's the reason why we're open in all 49 states, if that's right. And then you have a typical mortgage company that is going to have to be obviously applying for the licensed individual for each one of the states. And you, as a loan officer, you have to also be licensed in order for you to do business in that specific state, right? So let's say, for example, I'm already licensed in the state of California, for example, and the mortgage company I am under is not licensed in California. I cannot do loans in California.
Oh, okay.
Right. So that's
like in real estate. It's the same thing. The broker and the agent both have to be licensed.
Must be licensed in that specific market for them to be able to do business. Correct. Right. So that's really the big difference. As far as the loan programs, they're all the same. As far as the interest rates, pretty much almost the same, right? That's really not the change. The change is going to be more of the actual structure of the business itself. That's the biggest.
And most lenders do use an external servicing. It's very rare, and that's normal.
Majority of mortgage companies and banks do sell their home, the loans that they originate to a servicer who's going to servicing the loan. Correct. Okay. Very few that service the loans they originate. That is correct.
Well, you know how long have I been trying to get you on here before Corona?
3 weeks at least.
Well, yeah, before that. And so
at least.
I'm so thankful for you. I mean, you and your team, actually, it's just a shocker that as busy as I know your industry is, to get a random call to say, how are you doing, is that's that 5-star that I love about you guys.
I appreciate that.
5-star.
I
Anna,
appreciate that.
Christine, even Christine.
We're in this together. We're in this.
Brian, and Brian's been so patient with our client that his loan just was moving and shucking and all over, you know, and we've come with a plan. And that's the main thing, is just that your lender can help you get a plan so that you don't feel discouraged. And I just keep telling people, if you're interested in buying something, don't wait until you find. My daughter was looking at a house today, and I said, don't even do that. You need to get your loan in time first. Let's talk about that.
Correct.
But let's close off with, I want you to give, let's both tell a really good, positive story of what's going on with us in this time right now.
Okay.
Let me tell mine first, and you tell me yours last, because you're the guest, and I know yours is going to be better than mine.
A positive on.
Let me tell you mine first.
Okay. Well, let's hear.
So I have, you know, I'm out here in Bastrop in the middle of nowhere, and I mostly do commercial, and so all commercial investors are on hold right now. Banks are on hold. So our big $1 million deals, not happening. And so I've been getting these little residential deals, but there's a couple of landowners out here in Bastrop that have a lot of property that they just buy and sell themselves. They're not licensed. They're the owners.
Right.
And they have been so kind to me. I just randomly, you know me, I'm not shy. I asked a couple of them, hey, can I just put a sign with my name on it, letting people know that I do commercial and I can help you? And I have it on my sign that I can do a financial analysis of their portfolio or whatever, just so that I can start conversations. I'm just surprised and tickled and just blessed that 2 landowners are letting me put my signs. I'm not selling their property. They're just
right. You just put it more of like an exposure.
Eddie, come on, you know I'm gonna try to sell that property.
Yeah, of course.
I just think that's very sweet, and that everybody's being helpful, and they're helping your neighbor, and your humanity is helping each other. It's very nice. I like that.
I love it. That's awesome. And that also says a lot about you being a hustler the way you are. Yeah.
I'm a hustler.
Yeah. Yes. All right. Well, so what's good? I learned to wash dishes. Believe it or not.
For those that don't know, Eddie is very much like my husband. Both of them are surrounded by women. There's not even a male animal in our house. All of our animals are female. Well, we have a new cat, because you guys might have seen my daughters walking around. She brought the cat, and he's a boy. That's the only thing. But you are surrounded with all girls. So why would you ever need to do it?
Yeah, well, I had to learn, and I had no excuse no more.
Yeah.
I ran out of excuse.
You gotta have some good customer stories. At least one good. Somebody's not yelling at you, Eddie. Come on.
We had a borrower last week, supposed to close actually a week before. They were already CTC'd. CTC'd, for those who are not familiar with it, it's clear to close, meaning the loan is ready for them to go and sign the paperwork and get the keys, right? The file was already CTC'd. And the investor who this loan was going to decided that they changed the guidelines retroactively and raising the minimum credit score. And those borrowers were below that minimum score. And literally, they went from ready to sign the paperwork to a heartbreak, right? It was not going to be closing, and the investor would not reason with us. And what we had to do is we had to think outside the box. I went and I pulled up the credit report, and I talked to the borrower, and I explained to them that if they were able to pay one credit card off, that would give us a good chance for that score to increase when we do something called rapid rescore with the credit bureau. And sure enough, she went, paid it off, provided me with a proof that she paid it off. I went and I contacted the credit bureaus and requested a rapid rescore. And a day later, we got the scores above what was needed, and they were able to close. So yeah, the closing was delayed a couple of days, but it went from a frantic, heartbreak, frustrated situation, panicking. They literally were already moving out of the apartment when they had already give their notice and all this stuff. And we were able to save it. So I think that was a very positive note, especially with the times that we were living in.
You got to go outside of the box.
Yeah.
And it's funny because I think you just get stuck in the shock of the moment. A lot of people think, oh, it's over, but you do need to keep thinking. That's one thing I do love about you. I know a bunch of stories about you're outside of the boxing. That's a cool one. And I'm glad you actually brought that up, just because I'm going to add one little extra piece of information that I think people need to know is a rapid rescore. Confirm me, but in my experience, it only takes 3 or 4 days, 5 days or something like that to get that rapid rescore
Correct.
done. And I think some people think
Correct.
it's going to take forever, but that's why I say contact your lender and let him be your partner to take your financial snapshot of where you are when they pull the application and check out all your stuff, and then get a plan.
That's it. Plan is 90% of the game.
That's right.
That's right.
Plan, but the plan from the guy who knows how to put the plan together.
And the plan from somebody who's played the game for a while.
For a
Correct.
little while.
For a little while. Yeah.
Well, thank you so much. I just love you guys, and I'm honored and thrilled. You're my very first Zoom. I'm going to put you on today. So
Awesome. I appreciate that.
And you're our resource. And if I have questions, you're the go-to guy, you and your team.
Thanks, Lisa.
Thank you so much. Have a great day. Go do some dishes.
Stay safe. All right. So.
No, you too.
All right. Take care. Bye.
Bye-bye.